All right, let's get right into this absolutely explosive Q2 2026 earnings report. Look, if you're still out there thinking of SpaceX as just a rocket company, you are working with some seriously outdated models. Today, we're talking about the only company on Earth that's actively building the integrated hardware and software infrastructure of the future, covering space, global connectivity, and artificial intelligence. So let's put on our financial analyst hats for this explainer and break down exactly how they are leaving their legacy competitors completely in the dust. First up, we've got to talk about the sheer velocity of their revenue right now. I mean, how does a company operating in literally some of the most notoriously capital-intensive sectors on the planet manage to nearly double its quarterly revenue to $7.8 billion in a single year? Well, the secret sauce is their extreme vertical integration. That is directly driving a staggering 92% year-over-year revenue growth, along with some massive margin expansion. And hey, this isn't just top-line vanity metrics, right? Their bottom line is shifting incredibly fast. They posted a net loss of $541 million this quarter, which, believe it or not, is actually a massive $467 million improvement from last year. Plus, they hit an adjusted EBITDA of $3.5 billion, up 191%. They are scaling aggressively, and it is absolutely paying off. Now, take a second to wrap your head around the sheer scale of their balance sheet. Following their historic IPO back in June, which, remember, brought in $85.7 billion in net proceeds and literally catapulted their estimated market cap into the trillions, SpaceX is sitting on a mind-boggling $100 billion in cash and marketable securities. That's not just a balance sheet, that is an absolute fortress. And you've got to love how they're managing their debt, too. To fuel their massive capital expenditures without just burning through those cash reserves, they just closed a $25 billion inaugural bond issuance. They locked this capital in across 5 tranches at a highly favorable 5.855% weighted average interest rate. Honestly, that is just incredibly smart leverage for long-term growth. So, the real key for us here is understanding exactly where this $7.8 billion in revenue is actually coming from today. Notice the massive shift in their business. Connectivity is now absolutely dominating at $4.3 billion. AI is following super aggressively at $2.6 billion, and the legacy space segment, that brings in $962 million. This beautifully illustrates the 3 interconnected pillars of their whole business model. You see, their competitors are out there trying to fight them in isolated, siloed sectors, which is honestly like bringing a knife to a laser fight. SpaceX is leveraging all 3 of these pillars simultaneously. Let's break down the actual projects that are generating this phenomenal value. Let's start with pillar number 1, space, and the dawn of the Starship era. So, this legacy segment saw a very healthy 55% sequential revenue jump, mostly driven by an insane 78 launches in just the first half of the year. But here's the thing, the real future value for shareholders? It's all about Starship V3. With 2 recent successful flight tests in the bag, they are slamming the gas pedal on R&D to hit full rapid reusability. Their stated goal is to cut the historical cost to orbit by 99% or more. If they actually pull that off, it literally obliterates the traditional aerospace sector's pricing models overnight. Moving right along to pillar number 2, connectivity, driven by the Starlink boom. This segment is the absolute financial heavyweight of the company right now, pulling in nearly $1.7 billion in operating income alone. That's up 79% year over year. Consumer growth is just exploding. Subscribers perfectly doubled year over year, hitting 12 million users, all while keeping a rock-steady $66 monthly average revenue per user. Plus, they are quietly locking down the enterprise sector, signing these massive fleet-wide agreements with major airlines like American and Southwest. And it goes way beyond commercial growth, because they're capturing the defense sector too. They just scooped up over $6 billion in multi-year U.S. government contracts for Starshield. That's their highly secure, low Earth orbit satellite network, custom-built for national security. And finally, we hit pillar number 3, AI, the computing behemoth. Okay, this is where things get truly wild. Revenue in the AI division rocketed 247% year over year, hitting nearly $2.6 billion. And to ensure long-term dominance against the legacy cloud providers, SpaceX poured an absolute jaw-dropping $15.8 billion into capital expenditures specifically for AI infrastructure. And that was just this quarter alone. That brings their 6-month AI capex to over $23 billion. And you can see exactly why that massive spend actually matters, right? The new projects generating immense value are rolling out fast. In rapid succession, they expanded their compute to 1.4 gigawatts, locked in $14.1 billion in contracted cloud sales, announced a staggering $60 billion acquisition of the AI coding tool Cursor, and launched their smartest model yet, Grok 4.5. They aren't just playing in the space. They're buying and building the entire AI supply chain from top to bottom. So, what is the big takeaway from all these numbers? It's that SpaceX is far, far beyond being just a launch provider. Armed with a $100 billion war chest, they are funding the world's most aggressive capital deployments across space, global internet, and artificial intelligence. Honestly, looking at this financial powerhouse, the only question left to ask is, who could possibly catch up?